The total crypto market cap has surged dramatically, now approaching a stunning $4 trillion milestone. This explosive rally is mainly fueled by Bitcoin, Ether, and XRP, each posting remarkable gains amid major regulatory developments. Bitcoin's price soared past $120,000 again, signaling renewed confidence in this flagship digital asset. Ether climbed over 8%, breaking above $3,600 for the first time this year, reflecting substantial buying momentum. Even more impressive, XRP skyrocketed nearly 20%, hitting a year-to-date high near $3.64, driven by growing institutional interest. These surges follow the historic passage of three significant crypto bills in the U.S. House, catalyzing a risk-on environment across markets. What's driving this impressive rally, and why are institutions flocking to cryptocurrencies now? One major factor is the regulatory clarity emerging from U.S. lawmakers. The passing of the Genius Act and proposals to integrate crypto into retirement accounts are expected to unlock trillions of dollars from mainstream capital markets. Institutional investors, once hesitant due to regulatory uncertainty, see these changes as a green light to allocate significant funds into digital assets. This influx might push the market cap beyond current peaks seen in December 2024, creating a new era of crypto adoption. Interestingly, this $4 trillion market cap places cryptocurrencies just behind Nvidia's market valuation, the world's largest publicly traded company. Nvidia reached and slightly surpassed the $4 trillion mark recently, showing the scale and influence of crypto within global finance. Market trackers vary, with CoinMarketCap reporting $3.8 trillion while TradingView highlights figures closer to $3.9 trillion. However, CoinGecko claims the crypto market has already surpassed $4 trillion, marking an all-time high. This discrepancy underscores the volatile and rapidly evolving nature of crypto valuation metrics in real-time trading environments. Digging deeper into the winners, Ether's 40% gain over the past fortnight is notable as it coincides with ongoing upgrades in the Ethereum network. These include advancements in staking and DeFi protocols, which are expanding Ethereum's utility and scalability. Investors see Ether not only as a store of value, but as the foundation of decentralized finance applications, attracting long-term growth potential. Meanwhile, XRP's rally is tied to its expanding role in cross-border payments, where Ripple's technology continues gaining traction among financial institutions. An approaching $200 billion market cap for XRP is now within striking distance, emphasizing its growing market influence. Market analysts predict more gains based on institutional integration efforts and favorable regulatory trends. Nick Ruck, director at LVRG Research, emphasizes that institutional interest will accelerate as firms build infrastructures for crypto services. Exchanges like CoinW note that the risk-on sentiment driven by U.S. legislation is pivotal to this surge. When regulatory bodies provide clarity, market participants become more confident, fueling asset accumulation and price appreciation. This feedback loop could sustain momentum into mid-2025, but volatility remains a factor for traders to watch closely. Now, consider the impact of regulatory bills like the Genius Act. This legislation aims to ease crypto adoption in retirement portfolios, potentially unlocking significant new capital sources. How might this change the overall investment landscape? Traditional finance players entering crypto markets will increase liquidity, reduce spreads, and likely stabilize prices long-term. However, this transition depends on successful implementation and investor education, especially concerning risks and DeFi mechanisms. Investors curious about staking, liquidity pools, and yield farming should watch upcoming developments carefully. On Bitcoin, despite a marginal daily gain, surpassing 120,000 marks a crucial psychological threshold. This milestone reinforces Bitcoin's status as digital gold and hedge against inflationary pressures. The asset's hash rate and network security continue strengthening, reassuring investors on its long-term viability. Bitcoin veterans like Willy Woo have adjusted their holdings recently, reflecting market cycles and profit-taking strategies. Such moves hint that seasoned holders anticipate future volatility, but remain optimistic over this bull run's growth trajectory. If you're tracking this rally, don't overlook smaller altcoins and emerging tokens poised for breakout. The broader crypto market benefits from institutional engagement and clearer regulations, which helps elevate overall valuation levels. Staying informed on policy shifts and technological upgrades will provide an edge in identifying promising investments. Remember to subscribe and comment below your thoughts on this historic $4 trillion crypto rally and what assets you believe will lead next. In summary, the crypto market is now entering a transformative phase marked by regulatory breakthroughs and massive institutional inflows. Bitcoin, ETH, and XRP are at the forefront, driving valuations to new heights unseen in recent years. This rally is more than price action. It reflects evolving global acceptance and foundational shifts in digital asset finance. The approaching $4 trillion mark isn't just a number. It symbolizes crypto's growing stature next to giants like Nvidia. Keeping pace with these changes means understanding both market dynamics and legislative movements, which will shape cryptocurrency's path well into the future. Stay tuned, as more exciting developments are guaranteed on this ongoing journey.